We have Jerry Gidel ready to talk about the wheat rally right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, did you expect this wheat rally? How did we come here?
Well, the wheat market has been going sideways since way back in the late winter, and that from there, it's got down here at such low values from where it was just at harvest time last year. But at the same time, uh, lots of investors are still short this stuff, things like that. We haven't had a lot of U.S. enthusiasm for wheat sales and things like that recently. We are up very near to the USDA's projection for the year already, but that is it's uh, people don't get excited sometimes about wheat because it's really what goes on around the world. And I think finally here, a combination of events that come together here, and the fact we had a huge amount of people in the investing world short the wheat market because of the fact it wasn't doing anything for the last, let's say, 6 months or more. From there, and so it turns out that when reports earlier in the week that things are getting a little dicey in the winter wheat areas of Russia, which is just east of the Black Sea, and that kind of combined with reports we had out of the U.S. here earlier this week of the crop conditions that were out on Monday night. In the U.S., the winter wheat uh, crop in the Southwest, the hard red, dropped 5% from 55% down to 50 and good and excellent. And that was a surprise. Everybody was kind of look 1-2% down maybe in that. And it's basically the area of Kansas, Oklahoma, and Texas west of I-35, which is kind of defining interstate road in the Southwest. And that's where a lot of the U.S. hard red winter wheat is located. And that, excuse me, turns out that that particular drop put together with the Russian issues and that started to get things rolling a little bit. And then things kind of started to build up additionally here because of the amount of people that were, and not really people, it was just the investing community, the managed money and things like that. We started to push through some downtrend lines, through some previous recent highs, things of that nature. Then all of a sudden, the psychology here of getting above the $6.20 level really kind of kicked in. And then at the same time here, there was some cautious about a new weather system moving through the U.S. With some definite rains for Kansas City, Missouri, on through Kansas and Missouri, eastern Kansas and Missouri. I'll get this straightened out yet. And of course, Iowa and the Eastern Corn Belt. And that actually was after I was in Kansas City for a meeting. And that it's really nice that when I left on Wednesday, but it definitely turned a lot rainier there on Thursday and Friday, the last 2 days. But the interesting thing about it is that rain didn't really get that far, as I said, into Kansas and Oklahoma, and so that added to it when they were kind of cautionary. And that's kind of put the last few, let me say, 10 or 15 cents here that pushed this. All the way up to the 650s level, 675 area is still a possibility, but it's really had an impressive performance here. And that's the one thing about this thing, even in corn and soybeans, that we've had such a limited enthusiasm here in the total. Look at the corn carryover, 2 billion. Well, there's no real reason to get, you short cover a little bit or take a little money off off your sales and then turn around and resell it. That could be the big factor in here is that beans have got a reasonably tight situation if things go south here on this crop. And that, well, corn, that could really be the major factor here if that all of a sudden changes its 2024-25 prospects. But right now, that's still out there. But wheat, short covering and starting to get concerned about its prices in the U.S. Because, okay, yeah, the U.S. Is part of the equation, but we're not the big factor anymore. Of course, it's Black Sea, that includes Ukraine. And also, Europe has been too wet, and their crop size isn't looking very good. And India at this point, their stock situation is way, way down. It's like 15 or 16 years lows, and they haven't been able to replenish it. They're about at 25-30% of their harvest is done, and they haven't been able to replenish their stocks. And so there's lots of things happening in the wheat market that we haven't seen in quite some time. So that's really been the factor that's popped up in here. I would have to encourage the producers out there to move some old crop wheat here on this kind of rally. Weather's always fickle. It could turn around and decide to rain from Colorado and cross both Oklahoma and Kansas when it's not projected at this point. But it's a situation where this is probably a place to reward the thing to have things percentage wise, having things sold up in that 75% situation for sure. But good to see we got something happen here, a little liveliness in the grains with wheat.
Well, into this mix, we also had higher inflation in the United States and a prospect of lower interest rates just little by little fading. And so how do you think that play out for the corn and soybean market?
Well, that was a background situation that was kind of anticipated here, which in reality, uh, uh, if our interest rates slide a little bit, then we ended up having maybe a lower dollar value in the currency world, and so that's one of the interesting things that happens right now is that uh, if we can get lower the dollar, we got better chances for sales out there. But right now the U.S. is not the lowest producer out there price wise, so that's another factor in here too. But the U.S. Federal Reserve, they were trying to be optimistic that we're going to end up having three interest rate cuts this year, but right now they're definitely slowing that down in the short term. But I also kind of I'm a little surprised that there's lots of analysis that they've been trying to project that we're not going to do anything until it gets to 2% inflation and reducing their interest rates. And that's going to be a very, very difficult situation to get accomplished here. From there, from the standpoint that uh, yes, energy and food are somewhat taken out of the analysis, but then the housing issues and also the other financial scenarios along the way, and that 3% seems possible, or even 3.5. But that's part of the reason this market's been a little spunky or up and down here in the stock market because they've been disappointed by the fact that the latest projections here for the end of the year, we're talking 1.5% growth and not 2 to 3. So, financial markets are going to kind of bubble around in the background here, but we got to also keep an eye on what the world corn and soybeans and wheat statistics are. They're still important to all those markets.
Yes, and I think this rally ultimately will have some impact on Argentina's final surface of wheat.
Yeah, there's could be some scenarios on how things get planted out there, and that the one thing that we did get in Argentina this week was uh, more and more talk about their whole impact of this leafhopper issues and the stunt situations and things like that. Actually, I'm not sure it was last Friday, but it could have been recently here. Well, I guess what happened to the exchange down there went down to 149.5, but then we also had the U.S. Excuse me, attaché down there announced that he was at 51. And that's a significant difference between the 55 the USDA has been at on this corn. So that's going to be watched very closely here on that. The twist that you have right now in Argentina is there's kind of two sections of their harvest going on. Their first section of their harvest is somewhat winding down here. Then there's going to be another batch that comes in June and July, and that's the one that's really been impacted here by the stunt issues and that from the bacteria or whatever it was that was on those leafhoppers and that. And so we're still not going to get a finalized number on Argentina's crop size until we get to see what the impact because they started with corn, then they had some beans, and then they did the beans after wheat, and then they came back with their second part of their corn harvest, and they'll be harvesting corn down there in June and early July. So it's going to be an interesting situation, all right, how their corn crop comes across, and even to some extent what's happening with the beans. They haven't had the best of luck, considering that they had this terrible bad weather last year. You'd hope they've got a better chance this year, but it has been a little bit disappointing for them because this year's weather and pests have definitely been a little bit of nip some of their potential yields than what they were hoping for, which in reality is the helpful for the U.S. from the standpoint that that government down there is really going to want to get a lot of money back into their system after having a terrible drought last year.
Yes, and what is your marketing strategy for the farmer? And yet, what are you going to watch next week?
Yeah, well, it's an interesting one. The wet weather situation here uh, is going to, and it seems like we're getting different batches here. We've got some decent rains that happened late yesterday and that, but then it didn't hit as we said, the western parts of Kansas, Oklahoma, and Texas. So that's why the wheat stayed strong today. Corn was mixed because we did have some rains in Nebraska, and it looks like it's going to get some rains. We had rains in Chicago today, and we'll have some more tonight. But then we're going to have an opening here in the Eastern Corn Belt, and then more chances again now tomorrow night into Sunday, and again Sunday night into Monday. And so this is a situation where our harvest progress numbers here on Monday are going to be quite interesting. To some extent, the trade doesn't get really excited about the progress of corn in April because uh, from May 15th and on, that's where it really makes a big difference on impact on corn yield because it pushes it further into this pollination period in the hot weather of July. But in the same regard, the it's kind of a scenario where we can make up a lot of ground and plantings in the month of May and still be in great shape for the year's prospects at this point. But I've been hoping we could see this July and D's corn to get a little higher here. We've got up around the 440, 442 area on May, and July is a little higher than that. And then kind of looking for if we do get less plantings than I'm anticipating here for this week. And I think we are going to have a chance to push into the 20s, maybe low 20s on this thing. But then we might not get much accomplished in the coming week if the rain activity is as intense as they're forecasting right now. And and on the soybean side, probably looking at the 12 to 15% type of probably a little bit higher than that, actually, 14 to 15%, 16% on plantings, and that. that could be interesting there on the soybean side of things. I'm kind of hoping that, or I guess I'm not hoping. I think there is reasons for this market to be a little more getting more unnerved here about the spring plantings. They have been kind of, as always, there, as I said, in April, they're kind of letting laissez-faire. But you get into May, things have got to get picking up. If it doesn't, then that's a bigger factor. But right now, at least, the 450 zone out there. We've been kind of zeroing on to moving some stuff in that 50% level. From there, and the December corn, I'd like to see it closer to $5, and also getting started on that at 15 or 20 or 15% on that on the corn. And the beans are really a tricky one. I really feel like there needs to be more encouragement for people to plant more soybeans because of the general need that we have for renewable diesel and the infrastructure that's already out there. And hopefully, also, I think that some of the issues in Argentina is going to give us an opportunity to be a little more fill in some of the blanks there, that some of the crop size there. And Brazil right now, there's still this kind of people are shaking their heads why the difference is so wide between CONAB and the USDA at this point. I'm not anticipating a 10 million difference in all the way down to the CONAB numbers, but at the same time, we're talking 3 or 4 or 5 million difference there. That could also provide a little excitement in the beans. And right now, at least, the world tensions from the Black Sea and also now the East issues and that have flared up a little bit. I think there's still lots of political uncertainties in this thing. So I wonder if we don't have a little bit of more excitement maybe in this thing. But the one thing that we want to do is take advantage and move up small crop sales on these things. If we get close to 475 and old crop July, or excuse me, 480 type of stuff there, and get up near $5 on days. You definitely want to be up there in that 70-75% sold situation, because the biggest thing is once this gets planted, they'll be beating it back down again, and the corn will be still out there. It's just a long ways till July before we could really get this market convinced there's some kind of major setback in U.S. productions right now.
All right. Thank you very much, sir.
You, sir, have a good evening. And at this point, watch the U.S. Football draft. Everybody's excited in Chicago on it after our big draft picks.
We'll do it. Thank you.